Let's go.
Massive bull run ahead. Bitcoin to skyrocket to $500,000 a coin by 2028. Apparently, this is the forecast of Standard Chartered Bank. We're going to discuss that. But I have bad news. Scott Melker is not with us today, and maybe will never be with us again. With recent market activity, he has panicked, sold all his bags, turned it all in cocaine, and fled to Colombia. So we don't know if we'll be able to relocate him. But until such time, I've sort of been left holding the bag here and trying to do this show. And so joining me today actually is really good news. We've got an immaculate, infamous, I should say, troll, Tom Dunleavy from MV Global. How are you doing, Tom?
Doing fantastic, man. I thought Scott sold the top a few weeks ago, and he's sitting in a yacht somewhere in Puerto Rico. But yeah, maybe he's gotten some other.
I mean, look, what he said was that he went skiing, but I think we all know that that's a euphemism.
That is what the kids call it nowadays, I'm told. Yeah. So that makes sense.
So Tom, really interesting stuff going on. I woke up this morning and I saw a tweet from you, and I'd like to start there. And then we'll get to $500,000 Bitcoin and beyond. And the tweet from you, let me try and quote it. So no project in crypto needs to raise more than $10 million, full stop. I frankly think that a lot of these big projects, Chain, Monad, Abstract Chain, Infinex, Movement Labs, etc., get their valuation strictly because of the need for big capital allocations from large VCs. The large VCs raised way too much money, you say, and now they need to figure out some way to deploy it. And so they convince all of these funds to take way more capital than they need. So do you want to explain yourself?
Sure. So at a high level, I think we've come to a place in the industry where you have these massive funds. You have funds that raise 300, 400, 500 million, even over $1 billion. And when you're a fund and you have that much money, you have to write a 20, 30, 40, $50 million check. Even if you're doing $5 million checks, you got to do 50 plus of those. That's really untenable. So you need these big projects to actually deploy into. And I'm not sure our space is there in terms of projects actually needing this much funding. We are in a space where you have low marginal cost software. Yes, it costs money to, set up different validators, to incentivize, development in the ecosystem, pay for hardware costs, to pay for R&D. But it doesn't cost, you see here, Monad raised almost $250 million, Chain over $100 million, Movement Labs $150 million. That is like 5+ years of runway for these guys, if not more. And it provides a few really negative things for the space. It provides very perverse outcomes or very perverse incentives for the team to actually build, right? If you have 20, 30, 40+ million dollars in the bank, it's really hard to be really scrappy and say like, okay, I got to go get that next customer, get that next user, etc. It also marks the valuations up to a place that makes it really untenable for retail to actually enter in. And then it also brings the actual valuations up to a point where you're marking into user growth and user acquisition metrics that are probably 5 to 10 years in the future. Like if you just look at Chain's launch today, it's trading, I don't know, I think like 10 billion or something FDV almost, or Movement Labs, same thing. Those are like S&P 500 plus type numbers for brand new protocols that weren't even in existence a handful of years ago and really have no net new users outside of the people who have been incentivized by yield farming to throw their money on the platform and try to get an airdrop. So what I'm saying is we need to lower these valuations, lower the rounds materially to actually fit where these projects need to be funded.
Well, I have a lot of questions and some comments as someone who's actually building in the space. But before I get into those questions, let's put a little bit of context here. So how many of these sort of large VC funds are there, like, that have raised multi-billion-dollar rounds, and how much capital do they still have to allocate?
So in aggregate, there's at least 5 to 10. In terms of how much capital they still have to allocate, from what they raised in 21, 22, you can say probably at least half of that, if not more. So there is a large amount of capital still remaining, and they need these big projects to deploy into.
So who are we talking about? We're talking about Paradigm, A16Z, Pantera. Who else? Dragonfly,
Polychain, Dragonfly. You could just go on the list of the top 10 VCs and see how much there is. I think Polychain or Paradigm raised a $2 billion+ fund in 21.
Yeah. So
we're raising, right? So
sorry, what?
These guys are still raising now. So they've raised their last fund and now they're raising their next fund. So
right. And what I think we've been seeing is that most of these sort of funds being raised now are substantially smaller than the funds that were previously raised. And so that would seem to indicate that the funds have not been performing well enough to sort of raise the same kind of money again.
I think the funds are right sizing now, and they're probably still too big. If you look at the space right now, ex Bitcoin, we're at what, like a little over $1 trillion. If you have, a few, 10, 20 billion, let's call it around 0.5% of the space is invested in venture versus the liquid markets. That's a lot of money. That's way more than traditional finances in terms of the aggregate market cap versus the actual venture dollars deployed. So in terms of what, and this is in an industry where the marginal costs are supposed to be lower. So in terms of the deployment of this capital and the recognition of the upside for LPs and then the downside for retail, and the space is starting to recognize this. The trade-off is just not there. But I'd love to hear, as you as a builder, your feedback and how you see this, and what generally you think of these costs.
So I'll get into that in a bit, but first I want to sort of continue just looking at this from the perspective of a VC for a moment. So one of the things that you said in the tweet is that these projects are being funded at valuations that fund them at perfection. In other words, nothing goes wrong. And 10 years from now, if nothing goes wrong, they should be valued at these valuations. But I think that if you actually have been looking around crypto, very few projects grow their valuations consistently. Instead, what we've seen very frequently is that projects come out of the gate roaring, right? So today, Chain came out of the gate, $5 billion FDV. So they raised probably a little bit over 100 million, right? I think the rumors were they raised at a little bit over a billion FDV in the last round. Or am I hearing the same things you're hearing? Right? So they've come storming out of the gate at 5 billion. And then you can say, all right, well, but what have they produced, right? What are their revenues? Where are their users? And then I would retort, why does that matter? That's not how this industry prices anything. I mean, look at the biggest sort of projects after, like if you look at the top 10, what do we got? $140 billion market cap, not FTV, market cap valuation, like something like I don't know. We're looking at something like 250 billion FTV for Ripple, for XRP, right? We've got something along the lines of 40 billion, maybe even 50 billion FTV for Cardano. So what do you think? Like the valuations here, I think the VCs are basing their expectations on those types of valuations. That's what they're trying to hit. I mean, that's literally their job. The market seems to be the problem, not the VCs.
Yeah, I think it's a recursive cycle because as the VCs mark these prices up, the benchmark becomes higher and the bar for competition becomes higher for each subsequent raise. Now, just like context is really important here. So if you just look at like the S&P 500, the 500 biggest stocks, basically, in the world, we'll just use broad numbers. At a launch like this, Berachain and Movement Labs is in line with like Moderna, Domino's, Dollar General. These are companies that are making, hundreds of millions of dollars a year. Molson Coors, like producing ridiculous products, have been in existence forever, having, real businesses.
Yeah.
What I'm saying is like day one, these things should not be valued this high. It just doesn't.
Well, okay. So let's talk about the big elephant in the room, right? Why does everything or anything in this space have the valuation it has? And that's because of the big boy in the room, right? 70%. If you pull out stablecoins, 70% plus of the value in the industry is in just one single asset, and that is BTC. And today, Standard Chartered come out and say BTC to 500K, right? So that would bring us to, I don't know, 10 trillion market cap in by 2028. So that's 3 years. So let's attack this from two verticals. One, right, what everyone is interested in, is it actually going to be a $500 a coin by 2028 or before?
Our price prediction for the end of this year is $250,000. So could it get another 2 or 3 years from now to 500K? Sure. If we just put this in context, let's just run down what we've gotten in the past 2 months. We've gotten a pro SEC chair, a pro CFTC chair, a pro FDIC chair, the repeal of SAB 21, which constrained all banks effectively from custodying and or transacting in crypto, numerous ETF approvals, this formation of the crypto council that's purchasing potentially some sort of strategic asset stockpile for digital assets. If you said any one of those individual things in the past 2 years, it would have sent Bitcoin price up 30% on each one of those bits of news. We're getting so much good news that we're not putting in context what this means for the industry, which is a ridiculous amount of capital flows from institutions in the next 3 to 6 months. So this price target seems fairly lofty, but as you very well know, the supply is constrained. And when you have all of these buyers, particularly the institutions who are going to incentivize retail to buy this stuff, they're now on our side and they're going to be pushing this stuff. So I think directionally it's correct. It's very, very lofty target, but I think the numbers in terms of growth make a lot of sense.
Yeah, I mean, look, 250K would take us to 2.5x where we are now. What do the people listening think, right? Will that will we end this cycle only 2.5x where we are now? Or are we going higher? And so I think that's sort of like being the big elephant in the room. Frankly, I think we can potentially end up higher. Donald Trump is talking about bringing down the 10-year yield significantly. That is going to flood the market with liquidity, like you said. We're not even taking into account the hype that is happening from AI right now. So we're likely to see sky high valuations across the market, not just BTC. And what do you invest in? If you want to invest in AI, actually BTC looks like a very good bet. It's a scarce asset in a world which is going to see substantial valuation gains, and it's likely to be one of the assets which is used by AIs in order to pay for things like compute and energy. So there's all kinds of flows that are going to be coming to Bitcoin, and Bitcoin in the crypto industry has been sanctioned by the US government for the last 16 years, and now we have this new US government which is not only not sanctioning it, but is saying again and again, our top priority is basically number go up. So people, post your comments. Let us know what you're thinking. But Tom, let's bring this back to the big mystery that everyone has and sort of what we were talking about, the valuations. It feels like in this market, basically only two things have been benefiting: BTC and bullshit. BTC and sort of like these meme coins, right? So it's this barbell: BTC up, bullshit up, everything else sort of dying on the vine. Why do you think that is?
So we're having 100x plus the amount of tokens that have been launched in previous cycles, and we already live in a fractured attention economy. Just real briefly on the chart on the screen for folks who think we have just a lot of hopium here, and you've probably seen a version of this chart, but to put it in context, this is Bitcoin each cycle from the bottom. So you can see the first cycle, yes, 500x up, next cycle 100, next cycle 20x. So far, we're about 6x. So this is happening with a lower amplitude for sure, but and we're at the point in the cycle where you've seen sort of these inflection points in actual price action. So it's it would be very much in line with past cycles to get another 3-4x from here, without even considering the institutional flows or retail flows via the ETFs, et cetera, et cetera. So we're still in a very reasonable point based on last cycle, even and previous cycles based on a lower.
And they were basically tracking last cycle almost 1-to-1. for Bitcoin, not for the other assets.
Correct. Bitcoin. And this goes to your question then, what happens with alt season right now? And this goes to the fractured attention point. We have not only fractured attention in our everyday lives and across social media, but fractured attention because of the pump.fun and meme coin. And hey, immediately the president mentioned something, let's launch a new token about it and hop all of money of capital. So, my mental model really is that strong barbell, but it's going to be even more pronounced than we think. So it's going to be a handful of majors, and you see, Ethereum and, other SUI even now trying to enter that majors discussion. And there's going to be some very use case specific stuff for folks who are very specialized. So, and people tried to suss this out with AI and find out what that was, but still maybe too early to actually find individual use cases there. But this whole middle of tokens is going to really struggle, because who is the marginal net new buyer of these things who hasn't been on chain yet and is going and finding the 200th market cap DPIN token, because they've sort of sussed out, unless you have this cycle of use case, narrative adoption, pump within the community of attention, then your token just becomes lost in the noise. So all of these protocols that are in that middle are really going to struggle. So you need to latch onto a use case. You need to find a community, or these things are really going to just go slowly to zero. And this goes to the point earlier.
Isn't this what maxis have always been saying, right? Maxis, including myself, saying that over time, basically everything just gets sucked and stripped off into Bitcoin, and the rest of these things go to zero. And now maybe we are at that tipping point, right? Because suddenly Bitcoin is being adopted by the largest financial institutions. Sygnum Bank, a Swiss bank, focused they've been growing like crazy. They recently hit a unicorn valuation. Basically, a Bitcoin-focused bank out of Switzerland have said that if just $1 billion, which is nothing in comparison to what people are talking about for the SBR, if just $1 billion of a strategic Bitcoin reserve were to be purchased, that would mean that the price would surge by 20 billion, right? So they're basically assuming a ratchet here, or a leverage of price appreciation in the entire Bitcoin market cap of 1 to 20 on each purchase. Every dollar that goes in is going to send the market cap higher by 20x that dollar.
Totally reasonable and makes sense, because the vast under allocation to the asset class here, and how in the broad scheme of things, still how small it is. This is not only, so the strategic reserve is something that I think is 100% going to happen. I've called for this for a while, but also these state level strategic reserves. I think we have 17 bills in these state level congresses. So you are going to get at least a handful of those passed. I don't think all of them will be, but that, and the individual pension funds within the US have a ridiculous amount of capital. Like the pension funds of California, New York, Texas, et cetera, have more money than, the majority of countries out there. So even a very small allocation from these guys produces a ton of inflows. And then you have the game theory effects of countries saying, oh crap, I'm behind the 8 ball here. I got to start putting money in. So things don't move as fast as we'd like them to, unfortunately, because traditional finance and institutions move in quarters, not days like we do. So it's very cliche to say zoom out, but the whole list I ran through previously, and then all of the different enactions that are in place right now in terms of these direct purchases of Bitcoin is very powerful. It's very, very powerful.
So
hard to quantify.
What are your thoughts on allocating to projects specifically in the Bitcoin ecosystem, right? We've got Babylon are going to go to market probably sometime soon. Their token's going to hit the exchanges, right? They've got billions of dollars in Bitcoin, which has been sort of pre-placed in their pre-placement program. We've got a whole bunch of Bitcoin rollups. You've got Bitcoin OS, of course. There's crazy things happening to Bitcoin. Bitcoin is becoming a fully programmable layer as we speak. Are we just going to see a shift from sort of all of this other ecosystem stuff into Bitcoin, because it's clear Bitcoin has won, but we're still going to need applications. We're still going to need kind of Web3 type of things, but they're going to be built on Bitcoin. So are you allocating there?
So the struggle I have, and I'm sure others have this, is I think everyone recognizes Bitcoin is the biggest economic settlement layer by weight, by mind share, and therefore the most secure. The issue is we've talked about these upgrades and changes to Bitcoin for quite some time. So one, handicapping how real they are, and then two, understanding the nuances of the technology behind it is a very big challenge. So I think a lot of allocators in the space are very much wait and see in terms of what actually will happen with a lot of these fantastic L2s that are being developed. So personally, it's just really hard to parse it. So I turn the question back on you and ask, how do you make folks understand sort of what is being built here, and then what is the timeline to actually realizing and having something people can kind of tangibly touch and use and be excited about?
I think it's very real. I know it's very real. Like we've had, so our team, we managed to demonstrate ZK verification on Bitcoin several months ago, and where that was a hard-coded ZK verification. It took 54 transactions. We've now gotten down to 6 transactions. We expect to get it down to 2. So it's very real. Testnet for us is coming out soon. Babylon have seen I think it's $6 billion worth of BTC flow into their system before they've even launched, and they're about to launch. There's a whole bunch of projects that have been built on them, some of them multi-billion-dollar projects, not to mention that there's multiple, Bitcoin Layer 2 projects. So I think it's very real. And actually, I want to come full circle. Maybe you and I, after this, we can chat a little bit about what I actually see happening in the Bitcoin ecosystem. We can have a conversation about that. But back to your original tweet, right? You asked me, as a builder, what do I see? I think from a tech perspective, you're right. You don't need that much money in order to maintain these systems. However, I think in crypto, there's 2 weird things. One, you get one shot to raise capital. And then you basically IPO, like the first thing you do is IPO. And that was your shot. And then the second thing is, going to the heart of what you were saying, it's all about attention. And so most of these projects, most of their spend is marketing spend. That's why you raise the big capital. 80% of it is going to marketing. And so basically we're in this arms race of who can sort of spend more on doing crazier things or sneakier things in order to get attention. And yeah.
The best marketing is making people money, and it's almost impossible to make people a lot of money when the protocol launches at a $5 or $10 billion FTV. I think the notable exception would be Hyperliquid, but they airdrop 31% of their token to users. So that was their marketing, which
which is
pretty good.
But that's just as expensive as raising huge amounts of capital. All right, so let's bring this to a boil. Let's bring this to an end. We've spoken about $500,000 Bitcoin BTC price from Standard Chartered, Sygnum Bank saying that's going to be peanuts, us saying everything about this sounds realistic, and now Eric Trump jumping into the ring saying he thinks it's a good time to enter BTC. What do you say, Tom? Now's the time to press the buy button?
This guy knows something, right? Like, obviously, like if you look at World Liberty Financial, their entity has been basically like T-whopping ETH. They've bought mid 8 figures now, and they were just having these ridiculous buys. They hold, I think, BTC through WBTC right now, which I know is probably not your favorite, but they're very bullish on the space, and they're actively deploying capital against it, and they're talking their own book. I mean, the tweet he had about ETH, which wasn't just on the screen, was buy ETH, thank me later, sort of like in almost those words, and then he changed it to just good time to buy ETH. So does this mean they're buying it in the strategic reserve or this Bitcoin stockpile or whatever we're going to call it? Potentially. I find it really hard to believe they're going to spend 180 days analyzing it and come to the conclusion that we're not buying anything. So I think they're likely buying a handful of the majors, Bitcoin, ETH, and maybe a few others subsequent to this. And David Sachs, who's running this division, is a multi-coin LP, and multi-coin's biggest position is obviously very vocally Solana. So I don't know. You look at the incentives and you show me the outcome, and I think we're going to see a lot of strong purchases by not only the Trump entities but also potentially the government in the near future.
All right. Well, that is a wrap. Tom, thank you so much for joining me. Everyone who's been listening, we'll see you next week, and of course, we'll end with what is the one truth that we've learned in this industry, which is that there's basically never a bad time to smash that orange buy button. All right, guys. See you next week.